I can do what anybody can do. It pretty much, it's like I said, it's back to the decision and what's your why, right? What's your reason? What's your purpose?
Hello, real estate agents, investors. Throughout this series of webinars, I am inviting some top-notch, strong, savvy investors to come and share their experience with you. I hope you learn through this conversation that we have on Zoom, and they are participating in helping and sharing the strategies they use in real estate investment, and I want you to learn from them. If there is anything I can help you with, just feel free to call me or sending me an email, and I can more than happy to help you with any of the questions regarding real estate investment that you have. Let's go see them. So today's webinar is scale up to multiplex and moving from single homes to multiplexes. And without further ado, we have Zishan Chaudhry. He is one of the savvy investors that I have the opportunity to invite, and he accepted our invitation. Now we are going to learn the techniques, how he started. It's very interesting story. Whenever I talk to investors, how they started, you think they have to be the master of real estate investment. Well, surprisingly, no. And that's one of the reasons I want them to be here, see how they started and compare that to you. And the good news here is if you have the desire to pursue step forward, you can always do that. So without further ado, Zashin, are you there?
Yes, I'm here.
Okay. Yeah. You want to, let me see if I can share the screen with you. Just bear with me for a second. I think you have to take over as well.
I don't have a PowerPoint or anything, but
okay, I have to make sure. Let me see. Just give 1 second. Oh, there you go. Okay. Go ahead. It's all yours. So, okay. Zishan, thank you for coming up and take over. Tell us your story, where you started, and go on.
Yeah, sure. So my name is Zishan, like you heard. I'm actually an investor from Windsor. So I'm currently living in Windsor. Originally from Toronto, like in the GTA, actually Markham. And I've been living in Windsor for the last about a year and a half now. But essentially how it got started was actually in 2016. So 2016, I was still working, out of a full-time job. Actually, I'll take a little prior to that. I was, I graduated from university, got into finance, started working in banks, and just a lot of entry-level jobs. Not really decided exactly what I wanted to do, so it ended up bouncing around from internship, accounting internships, publishing companies, things like that. Just never really finding a path. So yeah, in 2016, I was actually just browsing around, looking for different options, looking for something like passive investment, and also something that possibly I could, do a little bit on the side here, and then eventually turn it into a full-time career, or start my own business, or somehow do something passive on the side that would lead into a business. So I actually started searching online, looking up different groups that are out there. I heard real estate was, one of the vehicles a lot of people use to create wealth. So, I was just searching around looking for people who I can speak to. At the time, there wasn't as many groups. Like now you see there's so many webinars, meetups, there's so much on YouTube, all this information. At that time, it doesn't seem too long ago, but there wasn't many meetup groups. So I happened to find one, just gave a call to that, the organizer of that group, and then it kind of went from there. She introduced me to real estate. She introduced me to her weekly webinars, and I just got hooked from there. And essentially, she kind of pitched me on 3 different areas at the time. So 2016, prices were still very reasonable. She had pitched me on Hamilton, Barrie, and Windsor. So me, just working just an entry level job, I was like, with the money I have, Windsor seemed like a very affordable market for me. Really, I only needed about $15,000 at the time to get in as a down payment because the prices were really cheap there. And then from there, yeah, I just kind of took some time educating myself, reading a few books here and there, and then just took action, like, just connected with a realtor that she referred me, mortgage broker, got pre-qualified, and then, yeah, just took off from there. So started buying single family homes in Windsor. Um, and, the market picked up quite a bit in 2016, 2017. So then I started learning about the BRRRR strategy. So I started refinancing my homes, the ones that I initially bought that have, even without adding, too many renovations, the price had just appreciated. So I was literally, if I was able to get 30, 40K out of a house, I would refinance it and put it into the other house. In between that, I also took some time to actually invest in the States too, because I was like, how can I look at more opportunity? How can I see, in the US, they have a lot more supply. So I started taking that path down there, invested, I took a break from Windsor for about a year and started investing in the States. So I was doing flips in Orlando, I was doing BRRRRs in like, the Midwest, like Pittsburgh, for about a year. That was going well, but obviously like you get the challenges of financing as a Canadian citizen. So then, I said, you know what, I already have stuff in Windsor. Let me just focus in Windsor and see what I can do. So I continued to buy, smaller properties, single family duplex was the biggest I had at the time. And then, I was I was listening to a few podcasts based in the States on multifamily apartment buildings. So, I took a deep dive in that, educated myself on that, took a couple of courses as well. And then when I found out how that works, how multifamily works, then I was hooked on that. So I said, you know what, Windsor's a pretty good market. Price per door here is very reasonable. So what I did, I just started looking at bigger properties. When you get over 5 units, it becomes commercial mortgages. So I went for a sixplex, bought the sixplex, added value to the sixplex, renovated units, increased the rents. And then from there, I started looking at bigger buildings, got into a couple 7 units, into an 8 unit. And then from there, in the last year since 2019, actually come 2019 in the summer, I had about 20 or so units, but I was still working at my full-time job downtown Toronto. But at that point, I wanted to make a decision, like if this is something I want to do, I want to be in it full-time. So summer of 2019 is when I decided that, my cash flow, because Windsor is a very high cash flow market, decided that my cash flow was enough to, cover my living expenses essentially. So took that move. I ended up moving my life to Windsor, with the goal of scaling that multifamily business strictly, right? So, I got rid of property management, doing everything myself. And then from there, essentially I was burning my smaller properties to get into the larger properties and just refining them. And I held on to everything I had, the single families for quite some time until I recently sold some of the smaller stuff. And since then I bought a 12-unit building, and right now I'm buying another 12-unit building. So yeah, so it was just a gradual scale from the single families and just refining as much as I can. I understand, like, you don't want to over leverage, but when you get into commercial, it's a whole different game in terms of financing. It's actually easier to qualify. Myself, on paper, we don't show much income because for tax reasons, but yet we're still able to buy multi-million-dollar properties, with multiple units. So that's pretty much what I'm doing now. The growing the business here and scaling and looking at larger and larger properties. So that's what I'm doing right now.
Excellent. Zishan, tell us about how you started. Like the first step, you're working full time, let's say for the bank, and then all of a sudden the light goes on. I have to get into real estate investment. Tell us about your hesitations, your questions, fears. If you have any family, friends thinking or talking about you, try to talk you out of this. Tell us your initial hesitations or initial move or desire. Tell us a little bit, what was your engine that would really attract you towards that investment?
Yeah. I mean, obviously, at first there was a lot of people, just speaking to people who had owned real estate in the past, and the one big thing that I took away from that is like, you don't want to get involved with tenants and property management and, having the responsibility of taking care of a home that's not yours, like, that you're not living in. So obviously heard all that stuff, but for me, I was like, you know what, I've tried all these different things. I had tried options trading. Like I still do that reactively, but I tried, tax liens. I tried all these different, online business, Amazon business, all that to find something that creates, stable income and also something that I enjoy. So that was kind of my trigger point. It was more like out of, jumping from job to job. You're, 25 at the time, and I'm like, what am I doing? I keep bouncing around here. I should find something that I actually enjoy and that's going to allow me to scale. So that was the main trigger. It's kind of like trial and error, pretty much. And from that, when I found real estate, even after the first two properties, you can see it when you see the results. That okay, now I just bought this a year ago. It's up 50K in value. I really didn't do anything, but now I have this 50K where I couldn't even save that much in a job, right? So when you see that first initial step, even in the first couple properties, um, that's what really got me, into real estate and proved to me that this works.
Did you have any financial challenges moving from the first home to the second one? Did you get into joint venture?
At first I didn't have to do the joint ventures in the first couple homes. When I bought the sixplex, I did get into joint venture. So at that point, obviously you run out of money. You put all your money, any kind of money I was making, even in a refinance, it would never be profit. It would always be to put into another property. So, a larger property is a 6-unit building. I didn't have the capital. I didn't have all the capital. So I brought in a 50-50 partner from Toronto, who I met up at a meetup actually, and we had similar interests. And yeah, I mean, at that point, the larger you go, you're eventually going to have to raise capital. So, I did have that challenge, even scaling up after that. And now where, I pretty much raised the capital for the projects and I'm an active investor, active partner. But yeah, definitely you get into that roadblock, especially with residential financing. After 5 properties, 5 mortgages, then, they scrutinize your file a lot more, right? So definitely had that roadblock, but when I moved to commercial, that was removed from me. That issue was removed from me.
And what was the process of choosing the properties? Let's say from the first one. The first one was in Windsor, right?
Yeah.
Okay. How did you have anyone to sit down with you, tell physician, this is the first step, second step, this is the area,
Yeah.
etc.?
Yeah, I did. I actually had like so I had mentioned that I went to that meetup and I just contacted the host of the meetup right away and I said, look, this is what I'm trying to do. I've never done this before. What are the steps? And prior to that I did, read some books. So I had my little checklist saying like, okay, I'm looking for a single family home, 3-bedroom, 2-bathroom, generate positive cash flow. I had studied the area in terms of demographics and population, economics and all that. And I had all that stuff, but I still didn't know the process, like the actual steps, you know, going to a broker, getting pre-approved, the legal process behind it, all that stuff I didn't know, but that person kind of walked me through it and she said, you're going to learn on the way. The first one is you're just going to need help on the first one. After that, they're all the same pretty much, in terms of residential. So yeah, I did have someone that was kind of helping me out. But it was probably someone like yourself who, hosts these groups, these webinars regularly. And that's why I contacted, because at that time, that was the only person, in that space that was kind of a leader figure to help me out. So that's how I did it.
Now, talking about multiplex, for some of us, it looks like a huge things out of other planet. Is huge. How could you see yourself justified to move from single homes to multiplex? Was it more things that was attractive to you? For sure, you were not looking for more trouble. So first of all, you would have to deal with insurance company in a different way, the mortgage companies different ways, managing it in different ways. Like one single property is just one single property. You put a tenant or two, and that's it. You're done. But with multiplex, it looks like huge. So how do you overcome those obstacles or challenges, I would say?
Yeah, no, definitely. At first it does look like, it's a big jump, but when you look at it, how I see it is that now I see that a single family home is actually depends on your strategy, but single family is probably the most expensive real estate you can buy per door, right? And now let's say you have a 12 unit building. Now, yeah, it might have taken you quite some time to, gather the funds and get that 12 unit building, but now you have scalability, right? Economies of scale. You have one roof, one insurance policy, um, you know, and in terms of vacancy, like, maybe two, three, four tenants out of that 12 unit building have vacated the property, but yet you're still paying all your expenses, you're paying your mortgage, you're paying all your utilities still. So, even a 70%, 50% vacant building can still, handle the mortgage payment. So when I learned all that, and especially the way they're valued like a business. They're valued based on their net operating income. So, you know, it's not really in terms of, there is obviously appreciation, but there's a lot more forced appreciation. So when I learned the math behind it in terms of, $1 on your income means, in certain markets like $15 on your value, on your end value. Um, so I think the only challenge there is kind of a more mindset thing where, yeah, it's a lot more expensive, but it's just a number. If you're going to raise the capital anyway, you're going to partner with people, why not go bigger, right? And yeah, it's a bigger investment up front, but the payoff is much bigger as well. There's a lot more tax advantages. And obviously the financing at first is difficult when you're starting, but when you have a portfolio, it actually becomes easier because essentially what you need to have is that the property qualifies for the mortgage pretty much. And, the person in the people in the corporation, like the shareholders, they would essentially have to guarantee it based on their net worth. So they take into account your net worth and the property's performance versus your personal income, right? Like personal income isn't that much, but I'm able to buy these larger properties. So I would say that, yeah, at first it does seem like a challenge or a big step up, but it's just a few more zeros in the end. That's all it is, pretty much. Yeah.
Excellent. How was your experience in US?
It was good. It was actually very difficult, but I found that there's a lot more supply there, a lot more opportunities, a lot more public data. Here, like if you want to look up, a property or the history on a property, you have to go through a realtor. But over there, a lot of that information is already public. So for that reason, you could do a lot of the research beforehand by yourself. But obviously, the one thing was difficult in terms of traveling back and forth. Um, and then the financing, that's totally different. There are even banks here that would finance there, but as a foreign international, they would consider you. It does become difficult. I even took the time to get all my corporate setup there, LLCs and all that. And I was buying, but a lot of it was at first hard money transition into like a credit union, and the credit union rates were very high. But I know a lot of people who are doing that actively, and they've found ways around it. And I'm sure there's people who have scaled the same way they are here as a Canadian over there. So yeah, that was the main issues. But being so far away, you didn't have that much control. You'd have to kind of rely on your team out there, property management, and so there is that thing as well, right? Kind of worried about your investment in terms of what's actually happening there.
Now, do you create a single individual corporation for every investment you do?
Yeah. So for the apartment buildings, yes, we do. So we have a corporation, then we have shareholders in that corporation, where usually our partners, um, and typically the bank and the lawyer. That it just makes everything cleaner with a new corporation, unless I'm using the same partners every time, which is rarely the case. Um, and then I can use the existing corporation that I've used before. Obviously, it does get expensive with like tax returns, multiple tax returns, but it just keeps everything cleaner.
Excellent. And how do you handle your units? Do you have a property management handle that? You do it
So I have
yourself?
my own property management company here. So it's everything's in house, right? We have our own team of maintenance and contractors, um, and we have the contractor, especially, that's one thing in Windsor, which is very hard to find reliable ones. So as long as you keep them busy, you should be good. But yeah, essentially I take in, my maintenance team takes in all the tenant calls, and then I'm doing a lot of the acquisition side and raising capital side, but looking to scale that as well, bring on more people that can assist, because obviously I don't want to be chasing tenants around and things like that. So with scale, that you can hire more people and offload many of the tasks.
Excellent. Let's say you go to Ottawa. What are your criteria to find a multiplex there?
Yeah, I mean, Ottawa, I've actually looked briefly there. I like to buy within 80 to 150 maximum per door, right? And sometimes that's not the case in those kind of markets, but the one thing I'm looking at obviously is population growth is one thing for sure. Good rental market, a lot of renters, blue collar workforce, you know, all those things you would look at in any city in terms of picking a target market. But for multifamily specifically, I'm looking for purpose-built buildings. Not those big houses that have been split up into 6 non-conforming units. I want actually apartment buildings that are physical buildings with separate meters if they can. If not, then there's things you can do to separate the meters as well. But I typically like to see a pitched roof versus a flat roof. But in terms of that, the buying criteria is a lot about the numbers. So, one property could be worth totally different from what the other property right beside it. So it's not based on comparables, it's all based on income. So you got to really go and speak to realtors, get the financials, because that's really going to matter. But definitely, I'd reach out to an expert in that area first, and they can kind of guide you in which markets you want to be in, what are the rents, what's vacancy here. You want to get all those stats first, and then pursue it and see if it's worth pursuing for you.
Zishan, what are the stop sign when you see a multiplex that you should cross that multiplex, go after the next one? What are the things that is a warning? Don't buy me. Don't buy me.
Yeah, I mean, it's tough. I mean, from let's say you just see a listing online, it's tough to know without touring the property. But definitely, obviously, number one, if the numbers don't make sense, because it's clear, you can very quickly evaluate these properties based on the cap rate in those areas. So that's number one. Number two is that any properties that are near that might have an environmental issue, because environmental, you got on these commercial properties, you have to perform an environmental report. So if you'll see like a gas station right beside this building, there might be a chance that there might be a contamination in the ground, or there might be oil tanks in the ground, and that's a big problem for banks, right? They're not going to finance things like that. And like I said before, I like properties that are purpose built. If I see something might be 10, 15 units, but it's not a legal 15 unit, I just stay away from that as well.
Why is that?
Just because a lot of the reasons for that is I had a sixplex before too, and it was a house that's chopped up into 6 units. And yeah, sure that a lot of people are making that work, but all the utilities under one water meter, one hydrometer, and the water pressure and things like that, just because it was a house and now you have split it up into multiple families living in this place. So you run into some stuff with the mechanicals and heating and cooling. So I don't like those kind of properties, but I know a lot of people actually in the London area who are doing that kind of, because there are so many of that even here in Windsor. But that's just one reason. I mean, if you can take a look at the mechanicals, those are major things, right? Foundation is another thing. You can look at the masonry work, exterior work, and see if there's any major issues up front. It might not deter you from buying the property, but it might help you with your offer, right? Might have all these conditions. You'll definitely want to go in with conditions.
Absolutely. One of the things I noticed that happened in the past is the zoning. I've seen a few of the properties, so-called fourplex in Hamilton. And when we dig into that by a lawyer, they notice is a single property or is a duplex. Now you will have problem buying that and promoting it as fourplex and the city comes after you, you're not going with the bylaws of the city for a fourplex, so you're going to be in trouble. So the lawyer stopped the client, said, listen, this is a single properties, it's promoted as fourplex, it's not a fourplex. And
Absolutely.
they want to sell it. Guess what? People would check, would not pay the amount of money that you are expecting to get a fourplex. So these are the technical things you have to really be careful.
Oh, for sure. Yeah, definitely want to get your lawyer involved. That's why you always want to go into the conditions. I know in like the seller's market, it's tough. A lot of people are going no conditions. But yeah, if you run into that kind of situation, definitely want your lawyer to take a look and do your research on that as well.
One of the other things I notice is the inspector. Make sure the inspector you pick, they know what they are talking about. Like they have experience working with multiplex and not single properties. They not just go through and check that typical things that we check in a single property. Is more into that. Adding to that is also the insurance. Don't think is insurance is a single properties insurance company. It's a different scale, and do not ever go short or go shortcut on your insurance. Tell them exactly what you're getting into, all the legal part of the contract, pass it on to your insurance company, or you will be nailed down the road. It's very, very dangerous
Exactly.
path.
Yeah, for sure. For
Any
sure.
experience you have on those kind of due diligence?
Yeah, I mean, I always put in at least, well, it depends, on the property, but 30 to 45 days, sometimes less, sometimes more, sometimes 45 business days to do my due diligence. So in terms of due diligence, I have a very strategic approach with that and a checklist on that. But essentially what we're doing is, we get the property under contract, and then due diligence, number one is a walkthrough with all my trades. And, I do get an inspection, obviously through an inspector. But number one, I get all the trades in because those are people I work with every day and they're working for me. So they know, what I'm looking for and what, which should be avoided. So plumbers, roofers, get my roofer to come out, electrician to come out, you know, masonry guy to come out, everybody to come out and do our initial walkthrough, even if you have to pay them for their time. Let's say you don't go through the property, but at least you've been warned before you actually pay for that inspection, because an inspection on a multifamily property is much more expensive. They're upwards of $2,000. That's just one of the things you got to do. You also got to do a building conditions report with an actual engineer, with a certified engineer, which can be 2,500 and up. And then you're talking about a phase one environmental, which is 2,500 at least. So all those things add up. So prior to all that, I even go through with my team, and they're able to find things that might turn me away from this property before I spend all that money on due diligence, right? But yeah, insurance, you definitely want to run it by your insurance broker. And, so also not only on the cost wise, but also the coverage, right? It's very important, especially with those. There's things that you wouldn't think in terms of the plumbing and, obviously similar to single family as well, where you have the sewer backup and flooding, all that stuff is generally there. But some of the systems in like the mechanical room are different, right? From multi, because
Yeah.
you're essentially heating and cooling a whole building, right? How many, you usually have 3, 4 water tanks. So you want to have enough adequate coverage to compensate for all that, right?
Yeah. Remember everyone that the cost of whatever you do in a single property is much different than when you go to a multiplex. You're dealing with a
Yeah.
different beast, I would say. So it's good
Hmm.
to, or if you don't have experience, that's okay, but at least work with a trade that they have experience there. Do not just pick someone that is friend, is a buddy. Just take it very, very serious, or it's going to burn you, and it's going to burn you big
Hmm.
time. And I have to mute everybody. If you want to talk, just unmute yourself and you can ask question, or you can simply send a chat question. How do you, is there any way to pick a good bargain, like find them? How do you find your good deals?
Yes. So what you'll find out when you enter the space in multifamily, it's a lot smaller network in terms of, the good deals actually come off market, right? I rarely buy anything that's on the MLS, especially commercial, a multifamily. You won't really find great deals on the MLS, especially in this market. So, you have to have the relationship with the real estate agent, to help you find these deals. So that's where I've been coming across my deals, just being in, speaking to everybody about what you do, speaking to trades, speaking to property managers, but a lot of the realtors in the area who have been in the city for years and years. Um, that's how it would go to in terms of sourcing the deal. So a lot of it's off market because they don't want to put it on the most owners don't want to put it on the market and have 10 or 15 people who are not firm buyers, right? So they'd rather go to a broker, real estate agent who knows these firm buyers who this is what they do. They buy apartment buildings. They know they have the funds. They know they have bought buildings before, so they know what they're getting into. So instead of shopping it around to, on the MLS, they just go to these 3 or 4 buyers. And if you're in that circle, you'll have access to these deals. So that's how I've got all my deals, is essentially like either my own marketing out or realtors who have these pocket listings or exclusive listings, or sometimes totally off market. Sometimes we reach out to the owners directly through whatever means, right? Sending a letter or whatever, speaking to as many people as you can. But that's how it actually find these deals.
And Zishan, have you ever done any conversion, like converting duplex to fourplex, those kind of things?
I've done doing a 7 to an 8 right now, actually, and I'm also doing a commercial. It's a 7-unit building, and I'm turning the vacant commercial units into residential, and I'm turning a 7-unit to an 8-unit. So that process is a very, very long process, especially in Windsor. I mean, the city is just very slow here, I've found, but it's definitely worth it. You're adding a lot of value. There's more demand for residential, especially now. But yeah, the building permit, the whole rezoning, official plan amendment, I've gone through that, and I've done it twice now, and I tell you, it does take a very long time, but you have to keep following up with the city and make sure you're going through all the right protocols. Anything you do wrong, they'll just set you back a few more steps, right?
And it's costly as well.
Yeah, very costly.
Right, excellent. I have a question regarding, tell us how many years you are in multiplexes now?
I'm at 44 units now. I sold some of my smaller stuff. I sold that first 6plex finally last year with a partner. So now I'm just focusing on that. I mean, the more that I'm doing this now, the more I see that getting traction. And now, I'm looking at a 17-unit next, and potentially larger stuff after that. But I try to keep it going, even though I don't have all the capital raised up front. I have the deals that are coming in, and then I go to people, reach out to different people, different groups, to raise that capital. But the 44 units right now. I have my own team in place here, so gonna scale as much as I can in Windsor, and then look in other markets as well that possibly are growing as well.
Would you consider mixed use multiplexes?
I do have some mixed use. Like for example, one of the 12 units is 10 residential, 2 commercial, so they're both restaurants, like a sandwich shop and another restaurant. So now I don't do that because I just want to focus on residential, just because of I like CMHC financing, and they want it to be on residential essentially, and especially with commercial. Like if you have a good commercial tenant, it's very good because you get all those benefits of a long-term lease. No landlord-tenant board involved. But when you're sitting on a vacant unit, it's difficult, right? Especially now with pandemic.
Since you're coming from Windsor, one of the questions is, what is the average price for multiplex in Windsor that you can expect?
Yeah, I mean, the market has gone crazy here on the single family side. Also, it just happened, multifamily space is also very hot as well. But on the single family side, I'd say, the average price is now over in Windsor, like as a whole, like probably 400 or 500, I would say. I'm not an expert on the single families, but it's gone crazy. Like you could buy a home last year for 250 here, and now it's like 400. You have to get in at 350, 400. You can still find some deals, not in the best areas, for 250, maybe 300. But now I'm noticing that the market has gone insane here. And for multis, depending on the property and the location, I would say anywhere from 80K to 150, you can still find quite a bit. When you get to 200 per door, it'll be smaller properties. But the bigger you go, you can bring that number down. And but obviously there's some super nice in the A quality areas that are 200-300 per door. But I like to stay in that range, 80 to 150. But then it's also based on the numbers. If the numbers can justify that they want 200 per door, and it meets my criteria, then I will do it.
I'm going to ask you a strange question. Is it possible to live and work in GTA and start buying multiplexes in Windsor, long distance?
Yeah, you know what? I was doing that initially. Not nothing too big, but it's very possible if you have a team down here, and a lot of people can just hire property management who have knowledge of apartment buildings. So if you didn't want to make that choice, like I made a decision for this to be my business, right?
Mm-hmm.
But for people who just want to scale and still work their full-time job, it is possible. Just the value add, the BRRRR, because essentially we're borrowing these buildings, right? We're buying them, and then within 18 months we want to get all the investors' money out and refinance. But that's a very hands-on approach. And if you leave that to property managers, I'm sure they could get it done. But I feel like you can control a lot of the cost and the speed of it, being active and hands-on. But it is very possible.
You have to drive down there, having some people already in place, and start getting yourself familiar with different part of the city, and then have few people there, and then start looking for multiplex. You have to get comfortable in the neighborhood.
Exactly.
Never close your eyes and say, okay, I'm gonna go there. This is a multiplex. I'm gonna buy it and come back. It's not wise to do that. You agree?
Absolutely, yeah. Yeah, no, definitely the multifamily is a lot different. But yeah, you should, because before when I was working in Toronto, I knew the areas, but I didn't really drive the areas as much. But now living here, you notice what are the good areas, what are the bad areas, right?
Yeah,
How do these areas look at nighttime?
true.
Yeah.
And Zishan, tell us about one of your, let's say, worst story that you don't want to go through it. It was a
Uh,
nightmare.
I mean, I had a lot of at first a lot of tenant nightmares. Obviously, like I've gone through the whole eviction process where the people have I've left at that time I was working in Toronto, and I left the placement of tenants to property managers or realtors or anybody who's just not specifically doing the leasing, um, or weren't professionals. Let's say they were still some property managers, but they weren't professionals doing the leasing, and you got caught with some bad tenants, and I have a lot of tenant stories, but we'll get into that. But let's just say, like, gone through the eviction process. I'm talking about people have abandoned the homes, cats, fleas, everything in the home, damaging the place, hoarders, um, obviously drugs and all that. So there are, especially in Windsor, right? There's areas like that here as well, but just crazy tenant stories that you would never think to see. But that's mainly the one thing. I mean, another challenge was definitely when I was in the States. Trying to make that work was definitely a challenge, especially with some of the flips and the financing, and you're barely squeezing a profit in the end. Um, but yeah, it was all a learning process, right? You learn from it, and now you move forward, and it helps you um, get that experience that now is invaluable, right?
Excellent. And one of the questions we have here is there any course, or let me read the question, which course and which mentor would you recommend?
It honestly, it just depends on the strategy, right? There's so much online now
Yeah.
that like just like this meetup and other groups, like there's a lot of YouTube content. If you wanted to literally know everything without buying anything, there's so much YouTube content. So I would say YouTube your strategy that you're interested in,
Yeah.
and then go from there.
Excellent. Even part of the YouTube channel I have, in the past, I had few people who were invited and they were expert in multiplex as well. And they did some commercial multiplex as well. So the information is there, as you correctly said. And through your own personal experience, you join a meetup group and then you start reading books and then you start listening possibly or talking and to other real estate investors. And that's where you got the information and the knowledge to step forward. Every single things you learn would cause you a damage that you don't need to go through instead of experiencing that when you use other people's experiences. Now, do you have any three steps that the investors should do in order to get to where you are right now?
Yeah, number one would be decide, right? That was my first thing was like decide, is this something you want to do? Is this going to fit your lifestyle? And decide decide in terms of the strategy as well, right? So number one is decide, is this something you want to do? Number two, I would say educate. So be very specific, right? Don't fall into that shiny object syndrome where you're looking at, there's so many different strategies. There's wholesaling. I've pretty much tried them all. I've tried the wholesaling, I've tried the flipping, single family homes, burrs. It does take time to find something, but if now what I'm referring to with all the content that's out there, you can get a sense of what those strategies are like without having to do the same trial and error that say like we had to do, right? So that would be number two as a strategy, and then number three would be once you do figure out the strategy, focus on that one strategy and that one market first. I would say familiarize yourself with the market, and then maybe on the first one you do want to do a lot of the things yourself. I'm not saying you have to, but maybe that first one just to get that experience to be a landlord. Um, just to see how the process works, because with renovations and things like that, you might want to be there at first, and just so no one takes advantage of you, and also learning, right? That's the main thing. So those are, I say, the first three steps, and after that, you can, if it works out for you, then look to get into the next one right away. Don't wait too long, because even if you don't have the money, there's ways to get money. So I'd say once you figure those three first steps out, take action, and if it's something you like, I would say move on to the next one as soon as you can.
So you mentioned about how you choose a property, the multiplexes. Can I say this is the way we do it? Very simply, add to what I'm saying, because that's the starting of what you're going to take over, is you take a look at property, you are looking at income, and you look at expenses. So what do you do after? This is like a 10 minutes, 20 minutes report. You pull out what is the rent expense and the expense. And then you subtract and you see how much your mortgage is and see if it makes sense. Am I right?
Yeah, but you're exactly right. So that's the number one thing. You look at the seller should have a rent roll that gives your income. They should have a list of their expenses. Obviously, you want to verify all that afterwards, but at first, up front, that's all you want to do. And then once you have all that, you want to see, you obviously run your numbers with the financing that is very conservative. For me, like I do a 25-year mortgage. I underwrite these deals, analyze these deals at a 4% interest rate. Obviously, the rates are much lower now, but I still put in 4%. I have my own numbers for vacancy and property management and maintenance that you should all factor in. And once you have all that, you have a net operating income. Now you take that net operating income, which is your income minus your expenses, and then use that against the cap rate, which is, there's more to it. I don't want to, bore you guys with all the math behind it, but obviously essentially your income, and there's a market cap rate. So you divide those two, you get a value. So you want to make sure the price that they're asking is in line with that value that you just calculated. And then obviously in the end, when you look at your cash flow, you also want to look at your debt service ratio, because that also, like, let's say the numbers work out here, but you're not cash flowing much. Is the bank going to look at that if it's like a negative debt service ratio? They won't look at that, right? So you want to have a certain criteria. I look at 1.25 at least for every dollar of income, every dollar of debt. This is how much income we have. So that's typically how I analyze my deals.
Would you go with multiplex for student housing?
I've done the student rentals as well. Like I said, I tried everything at first. You know what? It's funny. The one market was student rentals, where everyone thought it's recession proof, and it's always going to be there. The cash flow is insane.
Mm-hmm.
But now in the pandemic, it's the hardest hit market, which is one you never think would, right? And multifamily, we're still getting, like, throughout COVID, we're still getting 99%. People are paying, still paying. But with the student rental, you sit on vacancies now for a long time. But if you can make it work, the financing is a little bit tricky with the student rentals, because the banks don't really like to see those kind of rooming houses. But the cash flow, definitely, right? Right now, you get them at a discount. Cash flow is really strong once people start going back to school.
Zishan, do you recommend any other cities besides Windsor, such as London or Kitchener, Waterloo, Hamilton?
Yeah, all those. Honestly, everything you said is they're great markets. Obviously, anywhere that people are going. So everyone's going to these cities. Even Windsor, people are coming. Windsor's right by Detroit. Hamilton's been a hot market. London, Brantford, Kitchener, St. Catharines, Peterborough, Kingston. All these markets have been super hot. And there's a bunch of smaller ones in there that you could go to, like Chatham. That's it's a very reasonable market. Um, yeah, I mean, everything you mentioned. Obviously, everywhere in Ontario is super hot right now too.
So what is your goal from here? Are you going to buy another 20, 30 units? What's going on?
Yeah, I mean that's the plan, right? I mean, I'm looking at a 17 unit next, and then so I try to go bigger every time because I don't want to be stagnant in the same. If I'm gonna go and scale, I might as well go bigger, right? So it's just a matter of raising the capital, and so I'm working on that. Speaking to more people, but definitely, the bigger the better. So my goal is to keep buying, even if I don't even have like this one I'm working on is closing on 12 units that I'm working on is closing in April, but I'm already working on the next one, right? So keep the lead pipeline full, and obviously goals all have goals, income wise, units wise, things like that. But it's whatever's comfortable for you.
Excellent. Zishan, we have approximately 10 people here listening to what you're saying. If you have individual conversation with every one of them and they ask you one question, the question they have for you here is, can I do it? What do you answer them?
I said absolutely. I mean, if I can do it, anybody can do it. Pretty much, it's like I said, it's back to the decision and what's your why, right? What's your reason? What's your purpose for why you want that? And if it's strong enough, then yes, anybody can do it, no matter what financial situation. Obviously, I'm not like an expert. It's a long way for me to go, but I know that with time, all that will come. So, it's a long-term game, and pretty much anyone can get involved at any capacity.
Okay, Zishan, do you have any courses, any meetup in Windsor? People can get in contact with you. Any phone number or any email that anyone has any question can get back to you?
Yeah, I mean, people can reach out to me on social media. Obviously, there's a couple of Windsor meetups, not like they're on my own, but you can reach out to me on Facebook. I'm sure you have my name here on Instagram. I started putting my content out on Instagram a lot more. And if you're interested in investing as well, we're actually just adding a few things to my website, but that would be another space as well, coreproperties.ca. And in terms of if you're interested in a partnership or anything like that, or because we have a lot of opportunities in terms of partnerships and also private lending. So we work heavily in the private lending space as well, short term, within a year. And if anybody's interested in that, you can send me a DM or whatever, and we can go from there.
Excellent. Listen, Zishan, it was such a pleasure to have you over. We learned a lot, and I hope everybody else learned. I always learn from every individual that's coming here. There are areas that I've never covered, but I get this information from you, and kind of equipping myself is a learning curve that is endless. You have to continue going on and on and on. So it was a pleasure to have you over, and I really appreciate your time that you share with us.
Thank you so much. Yeah, I appreciate you having me, and it was really good, speaking to everyone here today.
Excellent. And thank you everyone for joining us, and hope to see you next time. All the best.